Are you ready to start building wealth but think you need thousands of dollars to begin? Think again. In 2025, investing is more accessible than ever, and you can get started with just $100. Whether you're saving for the future, a major life goal, or simply want to grow your money, this step-by-step beginner's guide will show you exactly how to start investing smartly, safely, and confidently with just a small amount. Let's break it down and take your first step toward financial freedom. Today we will talk about how to start investing in 2025 with just $100. Beginner's step-by-step guide. So before we start, make sure to hit the like button and subscribe to my channel. 1. Why start with $100 in 2025? In 2025, starting your investing journey with just $100 is not only possible, it's smart. The financial world is more accessible than ever, thanks to technology, micro-investing apps, and commission-free trading platforms. You don't need thousands of dollars or a degree in finance to build wealth. Starting small allows you to develop crucial habits, learn the markets, and build confidence. With inflation still a major concern and the cost of living rising globally, your savings may lose value sitting in a traditional bank account. Investing helps your money work for you. $100 might seem modest, but compounded returns over time can yield substantial growth. For instance, a 10% annual return on $100 compounded monthly over 30 years could grow to more than $2,000. The point is not the amount, but the momentum. Beginning with $100 trains your mindset for long-term wealth creation. Plus, the psychological win of taking control of your finances, even with a small amount, can be transformative. Whether you're a student, young professional, or someone rebuilding financially, 2025 presents more tools, platforms, and educational resources than ever before to get started safely. Don't wait to have more, start with what you have. 2. Set clear investment goals. Before you invest a single dollar, it's crucial to understand why you're investing. Your investment goals will guide your decisions and risk tolerance. Are you investing for short-term goals like buying a laptop or a vacation in the next year? Or are you focused on long-term objectives like retirement, buying a home, or building generational wealth? For short-term goals, you'll want low-risk, easily accessible investments like high-yield savings accounts or short-term bond ETFs. For long-term goals, you can afford to take on more risk for greater potential returns, such as stocks or diversified ETFs. In 2025, tools like robo-advisors, Betterment, Wealthfront, or SoFi help you define your financial goals and offer tailored portfolios. Spend time assessing your timeline, income, expenses, and comfort with risk. Use online calculators to estimate how much you might need and what kind of return you'll need to reach it. If your goal is retirement in 30 years, investing $100 now is a great foundation. You don't need to get it perfect right away, just start with a goal. Your plan can evolve. The key is clarity. If you don't know where you're going, any road will get you there, and that's a dangerous approach in investing. 3. Understand investment basics. Before diving in, familiarize yourself with fundamental investing concepts. You don't need to be a Wall Street analyst, but basic literacy is essential. Begin with understanding assets, stocks, bonds, ETFs, exchange-traded funds, mutual funds, REITs, real estate investment trusts, and crypto. Stocks represent ownership in a company. Bonds are essentially loans you give to corporations or governments in return for fixed interest. ETFs and mutual funds bundle multiple assets, giving you automatic diversification. Diversification is key, it spreads risk. Learn about compound interest, the powerful force that allows your money to grow exponentially over time. Also grasp terms like bull market, rising prices, and bear market, falling prices. Understand the difference between active and passive investing. Active involves regular buying and selling, passive, like investing in index funds, follows the market long-term. In 2025, there are numerous free online courses and mobile apps like Investopedia, Coursera, and YouTube creators who simplify investing. Podcasts and books like The Simple Path to Wealth or I Will Teach You to Be Rich are beginner-friendly. The more you know, the less likely you'll make emotional or uninformed decisions. Knowledge builds confidence, and confidence helps you stay the course when markets fluctuate. 4. Choose the right platform. With your $100 ready, it's time to pick a platform. Fortunately, 2025 offers an array of user-friendly, low-cost options. Popular choices include Robinhood, Fidelity, Charles Schwab, Webull, Public, SoFi Invest, and M1 Finance. Look for platforms that offer no account minimums, zero commission trading, fractional shares, and easy mobile access. Fractional shares allow you to buy a piece of a stock instead of a whole one. For example, if Amazon trades at $120 a share, you can invest $10 and own 1/12 of a share. Robo-advisors like Betterment or Wealthfront automate your investing based on your goals and risk tolerance, which is great if you want a set-it-and-forget-it approach. Apps like Acorns and Stash are ideal for micro-investing. They round up your purchases and invest the spare change. Ensure the platform is regulated, SEC approved, offers SIPC insurance, up to $500,000 protection, and has low or no fees. Read reviews and explore the interface before committing. Most platforms also offer educational tools within the app, helping you learn as you go. The right platform should feel intuitive and support your investing style, whether DIY or automated. 5. Open your first account. Once you've chosen a platform, opening an account is usually straightforward and can be completed in under 10 minutes. You'll typically need to provide your name, address, social security number for tax reporting, employment status, and bank account information for funding. Choose between a taxable brokerage account or a retirement account like a Roth IRA if you're eligible. A brokerage account gives you access to your money anytime, while a Roth IRA is for retirement but offers powerful tax advantages. Most beginners start with a brokerage account for flexibility. Once your account is open, link your bank and fund it with your $100 deposit. Some platforms offer instant funding or let you trade with pending funds. Set up two-factor authentication to keep your account secure. Familiarize yourself with the dashboard. Look for tools like watch lists, learning centers, or simulators to practice trading. 6. Start with low-cost investments. With your account funded, the next step is making your first investment. Since you're starting with $100, low-cost, diversified options are best. The simplest way to start is with ETFs, which are bundles of stocks or bonds traded like individual stocks. Look for ETFs with low expense ratios, ideally below 0.1%, such as Vanguard's VTI, Total U.S. Stock Market, VOO, S&P 500, or SCHE, dividend-focused. These provide instant diversification across hundreds of companies. If you're interested in socially responsible investing, consider ETFs like ESGU, ASG-screened U.S. stocks. Most platforms allow fractional shares, so don't worry if a stock or ETF costs more than $100. You can invest as little as $5 in many. Avoid penny stocks, speculative crypto, or meme stocks initially. While tempting, they're risky and not suitable for beginners. Consider dollar cost averaging, investing a fixed amount regularly. Even with just $100 now, planning to add $10, $25/month creates discipline and builds wealth faster. Use this phase to experiment and learn. Track your investments, watch their performance, and pay attention to how markets move. Remember, you're not aiming for instant riches. You're building long-term wealth, one smart step at a time. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.